Monday, May 3rd, 2021, Monaco 64, home of alternative economics and contrarian views. I like to talk about loss of confidence in a currency and not inflation, because inflation leads to the loss of confidence. Inflation is, of course, the increase in the supply of money and credit, not backed by anything real, not backed by savings, not backed by fixed rate convertible paper into gold or silver. And there are more and more signs now, and even Warren Buffett has noticed that there is rising prices. They call it inflation, of course, and he's surprised. But we should not be surprised, because I've been warning for many years, actually, not just since the beginning of the crisis last year, when we've seen M1 money supply go through the roof, M2, the Fed's balance sheet go through the roof. No, I've been warning about this for more than a decade. Despite the financial crisis, we will get rising prices. They've been able to keep it away or tinker with the measures of consumer prices. They've been able to manipulate a lot of the markets, especially commodities, precious metals, and yes, that's what they do. But I think now people are waking up to it. Even Warren Buffett, yes, many of you are critical of him. He's not someone that I highly admire. I admire more his father, Howard Buffett, who wrote back in 1958, I think, or 48, about how gold is so important to human freedom, that you need a convertible currency into gold, that it allows individuals to control the power of government. So Howard Buffett, to me, is much more important than Warren Buffett. But Warren Buffett, I think, is still a better indicator of what's going on in the economy. His company is involved in many lines of businesses. One of the richest people in the world, has been doing this for decades. I trust much more what he says than what Jay Powell or Janet Yellen say about rising prices, about inflation in general. So what I'm going to do today, I'm going to go through an article in the FT where they talk about Warren Buffett and what he said recently about inflation. Then I'm going to look at Fiat Money Inflation in France by Andrew Dickson White. I've looked through or gone through this book many times in my videos, and I'll put a free PDF for this book in the description below. It's about the period back in the 1790s, revolutionary France, where they experimented with QE. They didn't call it QE back then. They call it the assignats. They basically started issuing inconvertible paper money. And it was even backed by church land, church estates, but that didn't work well. It collapsed eventually in 1796. So I'm going to go through here the summary that Andrew Dickson White gives about that period, and I think it's getting more and more like that period, not only in the US, but everywhere around the world. And as I've said before, we need to know our history so we can have a clue what might be happening now or in the future. Yeah, and after that, of course, we'll look at where the markets are this morning. So Warren Buffett sees significant inflation amid red-hot US recovery. The thing is, if it was a organic recovery, if it was a healthy economy, you wouldn't have inflation. I've looked before, and you probably remember, at the Bank of England inflation calculator. And back in the 19th century, when Britain was an industrial powerhouse, had the empire, the CPI, or inflation rate as they call it, was minus 0.1 a year, and it had a very good economy from the Napoleonic Wars until World War I. So this thing that's a a good economy causes inflation is a fallacy. The thing is, the economy is not good. The only reason we're seeing spending and rising prices is because government is creating money out of thin air and giving it to people so they can spend it. It's money not earned. So billionaire investor admits surprise. We're not surprised, of course, because we know that the consequence of inflation, which we've had, if Mr. Buffett knew the definition of inflation, that it's the increase in the supply of money and credit, he would know that eventually that would lead to higher prices. At Economic Rebound, as group reports 12 billion quarterly profit. You might think, wow, 12 billion, they're doing well. But you're going to see in the Fiat Money Inflation in France that is normal. It's a wrong signal. But be as it may, let's continue. It says, Warren Buffett told Berkshire Hathaway shareholders on Saturday that he was surprised by the red-hot U.S. economic rebound and warned the company was being hit by inflationary pressures. So this is a quote from Warren Buffett. Now, we're seeing very substantial inflation. He should say rising prices, right? But unfortunately, people now have changed the definition. They use the cause of rising prices as rising prices, which is confusing. It's like saying that a wet pavement or sidewalk caused the rain. No, the pavement or sidewalk is wet because it rained. And we're seeing rising prices because of inflation. It's not inflation, right? The 90-year-old chair, well, he's a chair now. He's not a chairman. I really hate that kind of terminology because why can't you call the guy a chairman? Said in his address to investors that was held virtually for the second consecutive year because of the pandemic. It is very interesting, he said. We're raising prices. People are raising prices to us and it's being accepted. Well, why are they accepting it? Well, because they got plenty of cash, free cash from the government. Berkshire Hathaway, which owns Geico, the insurer, Railroad, BNSF, and Benjamin Moore, the paint maker, reported robust 11.7 billion in profits earlier in the day, with some divisions disclosing price rises to keep pace with increased costs of raw materials. There you go. That's because the dollar is becoming worth less and less, and it's going to accelerate. This has been a very unusual recession. Yeah, right. Yeah, because the government has bailed everyone out, Mr. Buffett. Buffett said, right now, business really is very good in a great many segment of the economy. So I'm going to stop here so you get the idea. So just before I go into the Fiat Money Inflation in France, I tweeted out this weekend a story that came out on Zero Hedge about how there's shrinkflation, that in Costco, one of the paper towels that's been sold, the price didn't rise, but it's gone down from 160 sheets to 140 sheets at the same price. So it's basically a hidden price increase of 14%. And Rafi Faber talked about this weekend in his Endgame Investor. As you can see here, it was an addenda to his weekend report. He also talks about lumber withholding. And I spoke about 2 weeks ago or 3 weeks ago because the uneducated economist who has a very good YouTube channel, he was driving around, I think in Oregon or Washington State. I'm not sure where he is. And he saw a lumber yard full of lumber. And he said he's never seen that before. And despite the squeeze in the lumber price, the massive rise, he thought it was strange that there was so much lumber around. Some people commented at the time when I spoke about this that maybe they had sold it already and they're waiting to ship it. But now there's someone else here who made a video. And Rafi says, I found these two sources of interest. First, here's this video of a guy in Vermont who will probably be the next YouTube ASMR sensation. He documents about a half mile of what looks like stockpiling of lumber coming in from Canada. The question is why? Let's see what Rafi says about this. Rafi, of course, has been on my channel many times, and he is an Austrian school proponent like me, Austrian School of Economics, that is. You could jump to conclusions and say it's deliberately constricting supplies to push prices higher, but it's probably not that simple. Remember, as inflation worsens, commodity suppliers hold back goods, not necessarily out of a nefarious intention to monopolize and raise prices, but rather because they'd rather hold on to the goods than accept paper money in return, knowing its value is falling. So yeah, I've spoken about this before. It looks like this is starting to happen. We're also seeing, I think Rafi spoke in his main report about the fact that even Bloomberg News or Bloomberg Economics is talking about the fact that a lot of commodities are in backwardation, and that basically just means that the cash price of commodities for spot delivery are higher than the future prices. And that's very unusual, because usually future prices are higher because you add on the cost of storing the commodity. And what backwardation means is that people don't want dollars. They want to get rid of commodities and have them right away. Bloomberg says that it's a shortage of commodities, but Rafi and I think differently. We think it's because there's a huge surplus of dollars and people don't want it. They want real things. And that corresponds to what Warren Buffett is saying. So yes, as I said, the dollar, lots of confidence in the dollar is accelerating. I think we're going to start hearing the term anything but dollars, and other fiat currencies for that matter. It's not going to be just the dollar. It's going to be every fiat currency. They're all trash, right? They're not worth the paper they're printed on, or they're not worth the electronic entries they typed onto, I would say. So let's go to this summary here by Andrew Dickson White in Fiat Money Inflation in France, about what happened in that period. So he says, I have now presented this history in its chronological order, the order of events. Let me, in conclusion, sum it up briefly in its logical order, the order of cause and effect. Just have a sip of my coffee. Yeah, that's my end of Fed mug. You can get one in the Teespring store if you'd like. And first, in the economic department, from the early, reluctant, and careful issue of paper, we saw as an immediate result improvement in activity in business. Right, Mr. Buffett? Then arose the clamor for more paper money, more stimulus, more QE. At first, new issues were made with great difficulty, but the dike, once broken, the current of irredeemable currency poured through, and the breach thus enlarging this currency was soon swollen beyond control. Well, yeah, we used to talk in, I think in the 70s of millions, and then maybe in the 80s we started talking, and 90s of billions. Now we're talking of trillions. It's continued to swell. It was urged on by speculators for a rise in values. Well, for speculators, read hedge fund, Wall Street, politicians. By demagogues who persuaded the mob that a nation, by its simple fiat, could stamp real value at any amount upon valueless objects. As a natural consequence, a great debtor class grew rapidly. Well, there you go. All the people in debt, mortgage debt, student loan debt, credit card debt, government debt, corporate debt. And this class gave its influence to depreciate more and more the currency in which its debts were to be paid. The government now began and continued by spasms to grind out still more paper, still more QE, still more fiscal stimulus. Commerce was at first stimulated. There you go. Warren Buffett, he's surprised that the economy is doing so well. Well, I'm not, because that happens when you stimulate artificially the economy by the difference in exchange. But this cause soon ceased to operate, and commerce, having been stimulated unhealthily, wasted away. So there you go. For those people who think they can unwind QE, unwind the fiscal policy, yeah, they can do it, but it's going to kill the economy, and that's why they can't stop it. Manufacturers at first received a great impulse, but ere long, this overproduction and overstimulus proved as fatal to them as to commerce. From time to time, there was a revival of hope caused by an apparent revival of business, but this revival of business was at last seen to be caused more and more by the desire of far-seeing and cunning men of affairs to exchange paper money for objects of permanent value. As to the people at large, the classes living on fixed incomes and small salaries felt the pressure first. Well, sounds familiar, right? The general public has been suffering since the '08 crisis, since this policy of money printing, of inflation, fiat money inflation that we've had. As the purchasing power of their fixed incomes was reduced, purchasing power. Soon the great class living on wages felt it even more sadly. Prices of the necessities of life increased. Well, we don't count those, of course, in the CPI or the PCE. Mr. Powell doesn't seem to think it's important to count food and energy, the necessities of life. Merchants were obliged to increase them, not only to cover depreciation of their merchandise, but also to cover their risk of loss from fluctuation. And while the prices of products thus rose, wages, which had at first gone up under the general stimulus, lagged behind. Under the universal doubt and discouragement, commerce and manufacturers were checked or destroyed. As a consequence, the demand for labor was diminished. Laboring men were thrown out of employment, and under the operation of the simplest law of supply and demand, the price of labor, the daily wages of the laboring class, went down until, at a time when prices of food, clothing, and various articles of consumption were enormous, wages were nearly as low as at the time preceding the first issue of irredeemable currency. So yeah, this process has been happening in the West for many years, this fiat money inflation. And it's accelerated, of course, since the '08 crisis. It's going to accelerate even more now after the 2020 crisis and the new issuance of irredeemable paper. Yes, it's taking longer. In France, it took about 6 years, but it was the only country doing it. They couldn't do it for longer because people could see that it was something that was not sustainable. But now it seems that everyone's doing it. But I think we're in the last legs of this inflation. So the mercantile classes at first thought themselves exempt from the general misfortune. Well, read Warren Buffett for that. They were delighted at the apparent advance in the value of the goods upon their shelves, but they soon found that as they increased prices to cover the inflation of currency and the risk from fluctuation and uncertainty, purchases became less in amount and payment less sure. A feeling of insecurity spread throughout the country. Enterprise was deadened and stagnation followed. New issues of paper, read QE for that, of course, were clamored for as more drams are demanded by a drunkard. New issues only increased the evil. Capitalists were all the more reluctant to embark their money on such a sea of doubt. Yeah, I think we're starting to see that now. People holding back lumber and other commodities, the capitalists. Workmen of all sorts were more and more thrown out of employment. Issue after issue of currency came, but no relief resulted, save a momentary stimulus which aggravated the disease. The most ingenious evasions of natural laws in finance, which the most subtle theorists could contrive, were tried, all in vain. The most brilliant substitutes for those laws were tried. Self-regulating schemes, interconverting schemes, all equally vain. Well, these are all the Fed programs, the alphabet soup that they're trying, I would say. All thoughtful men had lost confidence. All men were waiting. Stagnation became worse and worse. At last came the collapse, and then a return by a fearful shock to a state of things which presented something like certainty of remuneration to capital and labor. Then, and not until then, came the beginning of a new era of prosperity. Just as dependent on the law of cause and effect was the moral development. Out of the inflation of prices grew a speculating class, and in the complete uncertainty as to the future, all business became a game of chance, and all businessmen gamblers. Same thing happening now. Hedge funds, Robin Hood, cryptocurrencies, everyone trying to become rich overnight. That's gambling, people. Don't forget, it's not real work or production. In the city centers came a quick growth of stock jobbers and speculators, and these set a debasing fashion in business which spread to the remotest part of the country. Instead of satisfaction with legitimate profits, came a passion for inordinate gains. To the moon, right? Then, too, as values became more and more uncertain, there was no longer any motive for care or economy, but every motive for immediate expenditure. Well, that's the immediate expenditure because they don't want to hold the currency because they know it's worthless. And present enjoyment. So came upon the nation the obliteration of thrift. So I'm going to stop here. You got the picture of what's going on. More reason to keep holding on to your precious metals, to your hard assets. More reason to have a good economy, household economy, to be frugal, not to be a spendthrift. Of course, I'm not saying you shouldn't enjoy life, but beware that this is temporary and artificial. This is not real, what we're seeing. So with that, let's quickly look at where the markets are this morning. It's 8:36 a.m. London time. We've got spot gold up $10 at 17.79. The low has been 17.65.80 and the high has been 17.81.80. So we're near the highs here this morning in London. Today is what they call a bank holiday here. Not the kind that FDR instituted. For some reason, they call all holidays now here bank holidays. I think it's related to May Day, but they do it on the Monday after the 1st of May. So the markets in London are very quiet, but the futures market still trading. Yeah, and the US is going to come in a few hours. What about silver and the silver squeeze too? I've said before, don't expect the paper price to go through the roof last night or today because they are still under control of that price. All we need to keep doing is, of course, stacking. And Billy's doing that because he's a silver bug. But nevertheless, the spot price is higher this morning. We're up 20 cents at 26.10. Up just under 1%. The high's been 26.14, and we've been as low as 25.79. The Dow future up 0.5%, up 174 points. Well, that's a reflection of the dollar, really. is it really the economy that's doing really well organically? No, it's just all the stimulus, all the fake stimulus and fake currency that's pushing business. People are getting the wrong signals. People like Mr. Buffett think everything's great. They think it's a bit unusual. There's a bit of rising prices, or inflation as they call it. So the NASDAQ future is up a third, or 43 points. The S&P future is up 0.5% or 20 points. What about the currencies? Yeah, the dollars continue to weaken here versus the major currencies. We've seen sterling get back up a little bit here this morning, up just under 0.2% at 138.35. The euro is up 0.1% at 130.33. Dollars is up versus the yen, though, 0.25% at 109.62. Dollars unchanged versus the yuan at 647.74. Yeah, we're seeing some other commodities today, aside from the monetary commodities, actually come off a little bit. Copper is down 0.1% at 446. Still quite elevated. We're seeing crude come off earlier in the day here, but now it's gone back up, and it's unchanged for the day at 63.50. It's been as low as 62.86. So quite a bit of volatility in the commodities there. And just to finish off, a look at the bond market, the treasury market. The 10-year yield is virtually unchanged, around 163. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.